Markets firm on easing US-China trade tensions. China's deflation continues. Australia's jobs data today will be closely watched by the RBA. And Singapore's growth strengthens. That's coming up in our 5 Things in 5 Minutes on Thursday, October the 16th. And then, in our deep dive interview, ANZ Economist Sophia Angala reviews which Australian states and territories are doing well amid all this year's trade and geopolitics drama.
Demand for gold rose as global trade uncertainty triggers its desirability as a safe haven asset. And most notably, Western Australia's goods exports to the US did rise.
But first, in 5 and 5 with ANZ, US markets firmed overnight on the back of strong corporate earnings and an easing in US-China trade tensions. Meanwhile, in Japan, opposition parties have banded together to challenge the appointment of the new Prime Minister-in-waiting, Sanae Takaichi, with negotiations set for the rest of the week. Here's ANZ's Head of FX Research, Marja Bentaman.
We do expect the Bank of Japan to be on hold at the October meeting, considering all the political uncertainty that's in play right now. And as a result of that, we will likely see yen weakening in the near term just because of all that uncertainty on the political landscape before firming up towards the end of the year once there is a little bit more stability on the political front in Japan.
As of 4 a.m. Sydney Melbourne time, the S&P 500 was up 0.3% and the Nasdaq up 0.6%. The US 10-year Treasury yield was up 1.8 basis points to 4.043%. Gold rose 1.2% to $4,213 an ounce. West Texas oil futures were down 0.5% at $58.43 US a barrel. The US dollar index was down 0.3% too. That saw the Aussie dollar up 0.4% at 65.12 US cents, although the Kiwi was flat at 57.20 US cents. Number 2, China's headline consumer price index was down 0.3% in September from a year ago, slightly weaker than expected. Producer price deflation eased to a 2.3% annual fall from a 2.9% fall in August. ANZ senior China strategist Xiao Pengxing says the ongoing deflation is not likely to trigger a monetary policy response on its own.
China PBOC is not inflation targeted. So basically, PBOC decision will build the growth data. In Q3, we believe that China growth has slowed but remain very stable. It was not deteriorating in the past several months. It's weak to stable. So I think it's still insufficient to trigger another interest rate cut. The policy time window to watch any policy change will be in December, ahead of the Politburo meeting or the Central Economic Work Conference in December.
Number 3, Australia's jobs data for September later today should see modest employment growth of 10,000 and the unemployment rate ticking up to 4.3%, according to ANZ Research. ANZ economist Aaron Luck says while there are signs the labour market is starting to ease, it is still strong.
I think today's results will be closely watched by the RBA. In the September meeting, their assessment of the labor market was that it's still a bit tight and is one of the reasons why they held the cash rate steady in September. Look, we still think that the labor market will remain robust in the near term with the unemployment rate staying at around 4.3%, and that probably means that the RBA is in no rush to assist the labor market.
Number 4, Chinese authorities yesterday set a stronger fix for the yuan above 7.1 to the US dollar. ANZ head of Asia Research Kun Go says the move shows the People's Bank of China is comfortable with the yuan appreciating.
Whether or not this is also a signal to the US side that the authorities are allowing more yuan strength to help to smooth negotiations is hard to say. But given that the 7.10 level has been broken, it looks like the next stop for the fix will most likely be 7.05. The stronger yuan has resulted in spillover effects for the rest of the Asian currency complex, which previously had been under pressure from a rebounding US dollar, but now has seen appreciation creeping in right across the Asian currency space.
Number 5, Singapore's third quarter economic growth of 2.9% from a year ago was much stronger than the market expected this week. Meanwhile, the Monetary Authority of Singapore this week kept monetary policy settings unchanged. Kuhn says it looks like the Monetary Authority of Singapore will be on hold until at least April next year.
The overall tone of the statement was overall fairly balanced. While downside risks to growth were acknowledged, the overall easing in trade uncertainty since the last MPS and the fact that Singapore's growth has been a lot more resilient points to the MAS being comfortable with current policy settings. They see inflation starting to pick up and they are forecasting inflation to average 0.5 to 1.5% in 2026.
Couldn't go there. Now, in our deep dive interview, ANZ Economist Sophia Angala reports on ANZ Research's latest Statometer report, analysing the economies of Australia's states and territories.
So the only state or territory economy to accelerate in its economic momentum and have its economic performance go above trend was the Northern Territory in Q2. And what supported that strength in its performance in this current quarter of the ANZ Statometer was its housing component. Darwin is seeing the strongest price growth in its housing compared to all other capital cities.
Who's not doing so well? Who's below trend?
So nationally, we did see Victoria and Tasmania state economies grow below trend. But even though it did show that after a period of sluggishness, we are now seeing economic momentum accelerate there. On the other hand, we did see Queensland and New South Wales did record decelerations in its economic momentum alongside its below trend performance. But that strongest decline in economic momentum was seen in the ACT, and that was driven off weak employment growth.
Now, in this edition of the Statometer, you've looked at the state and territory trade positions with the United States across 2024-25. Let's start off by who's most exposed to US trade, I guess, with that backdrop of the tariffs.
Victoria's goods exports are the most exposed to US tariffs compared to all the other states and territories. The US is now Victoria's top goods export destination across the 12 months leading up to June 2025, and they overtook China over that period. But what drove that rise in Victoria's exports to the US was elevated exports of beef and other meats and pharmaceuticals over the period, and that's likely due to US importers front-loading ahead of tariffs.
What about the other states? Are they as exposed or exposed in the same sectors as Victoria? And have we seen any impacts start to show through?
Following Victoria, the second most exposed state to US tariffs is South Australia. Confidential items of trade, including defense-related exports, was overtaken by beef and other meat as South Australia's top export to the US over the 12 months to June 2025. So while South Australia's goods exports are more exposed to US tariffs compared to the rest of the nation, given that it has double the average in its US export exposure compared to the national average, overall, the Australian economy has been broadly resilient during this period of global trade uncertainty and following US tariffs announced in early April. And we have seen that the impact of evolving US trade policy has mostly come through indirect impacts, appearing via a delay in the upward momentum in consumer confidence.
Now, one of the stories of the year has been the surge in the gold price. You've had a look at who that sort of benefited state-wise in the report. Just walk us through who's benefiting from the spike in gold exports from Australia.
So one of the reasons that Australia's goods exports to the US have hovered at elevated levels so far this year was due to a sharp rise in non-monetary gold export. So demand for gold rose as global trade uncertainty triggers its desirability as a safe haven asset. And most notably, Western Australia's goods exports to the US did rise around 250% between the FY24 to FY25, and that was driven by non-monetary gold exports. So we did see WA enter a trade surplus in goods with the US for the first time since the pandemic, just due to those elevated levels of non-monetary gold exports. So when you compare the level of non-monetary gold exports in FY25 compared to FY24, WA's exports to the US of this product were up around nearly 500%, just due to its position as a safe haven asset. But we see that as global uncertainty eases, the export of non-monetary gold are likely to moderate.
Sophia Angala there. I'm Bernard Hickey. That was 5 and 5 with ANZ for Thursday, October the 16th. Catch you tomorrow with what today's Australian labour force data could mean for the RBA. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.